So we absolutely have to go ahead and cover on Tesla stock as we're likely to get another surprise coming relatively soon. And what I mean by surprise is kind of like the surprise that hedge funds just got a couple of weeks ago. I mean, if you take a look over here, we see that the hedge fund managers were shorting Tesla stock and they absolutely got burned. And that's because they were pretty much shorting Tesla stock at a time when Tesla stock was having another historic rise. And so when you're shorting something and it's having a massive rise to the upside, well, things could get pretty painful for those that are bearish. Now, a lot has happened since I was on vacation. Recently, I was on vacation for a couple weeks, and we saw Tesla stock pretty much break above this 3-year descending trend line. However, ultimately, there was a few negatives that came out that led to Tesla stock falling below this trend line, putting us at a very critical area in regards to Tesla stock. Now, some of the reasons why we may have seen Tesla stock kind of fall below, well, of course, you had a little bit of a pullback after this huge run up. But of course, the main thing was the delayment or the announcement of the delaying for the, robo-taxi announcement that was going to be coming on August 8th. That's now pushed back to sometime in October. And then, of course, there was a lot of things going on politically. Now, of course, we know everything that took place with Trump. And we heard that Elon Musk was backing Trump through a, $45 million per month super PAC. And of course, that has kind of painted a bit of a target on Elon Musk from a lot of individuals who don't either support Trump or even from this current administration. In fact, we actually see this recent tweet right over here from Biden saying that he's sick of Elon Musk and his rich buddies trying to buy this election. So he's specifically calling Elon Musk out and kind of painting this target, and actually that's a bad word to use, kind of painting this bad image of Elon Musk kind of supporting the Trump side. Now, of course, I'm not here to delve into Team Blue or Team Red. You guys know I hate to delve into politics, but of course, this is something that's kind of creating a bit of a negative catalyst for Tesla stock. And of course, this is one of the small contributing factors into why we're seeing Tesla stock getting rejected from this descending trend line. I mean, even if we take a look from like an intraday view, you could clearly see that Tesla stock is getting rejected by this 3-year trend line. And of course, you guys know that I hate to, put a huge emphasis on technical analysis. I like looking at the fundamentals, the macroeconomic environment, and so on. However, we can't ignore technical analysis. Of course, it is still a data point that has its time and place, and I know there's some individuals who just hate on technical analysis in total, but I don't think it's something we should ignore. And it's clearly evident that what we're seeing from an intraday perspective, but even from a 3-year perspective, a weekly time frame, Tesla stock is clearly having some trouble breaking above this descending trend line. However, we may have something in the pipeline that could once again create that surprise that kind of burned the shorts of those hedge fund managers. And when we take a look at the short float for Tesla, it's nearly close to 4%, which isn't anything too significant. And for those that don't know, a short float kind of refers to the percentage of a company's total outstanding shares that are currently being shorted by market participants. And while Tesla stock being kind of around that 4% area isn't too significant, it really is when you compare it to a lot of the mega cap names. I mean, names like Apple are below 1% of being shorted, and so Tesla is one of the most shorted mega cap names, and that's why we often see when Tesla has this meteoric rise, the shorts kind of get obliterated, and then we kind of see this mini short squeeze, and what we may end up seeing is this mini short squeeze take place once again. And why is that? Now, to get into that, we kind of have to take a look at Netflix, which, if you don't know, Netflix recently just had their earnings and they did pretty well. I mean, revenue is up 16% year over year. Their earnings per share is up 42% year over year, and their subscriber base is actually growing. And you can see here on my screenshot for Excel that pretty much we see, in June 30th of 2023, it was 8.1, in terms of like the revenue, and now we're at 9.5 billion in terms of revenue. And so, obviously this is a good sign. Now you may say, whoa, what does this have to do with Tesla stock? Well, one of the things I mentioned for those within the Push and Profit private group is that while we're seeing a lot of the tech names getting beaten up right now, we may end up seeing that kind of have a reverse effect once we have earnings start to come out. As you guys know, we're currently in the midst of earnings season, so a very exciting time, and I believe that a lot of the earnings are actually going to go ahead and provide a catalyst for names like Tesla and other names to actually start to revise upwards, names like Nvidia as well. And so, this is kind of like a early sign, a precursor of what is likely to take place for a lot of these other companies, right? We see, Netflix doing pretty well despite a lot of individuals thinking that earnings were going to come out negative. And so I believe that the same idea is going to go ahead and, take place in regards to these other names like Tesla. And that's kind of similar to what we saw with the delivery numbers. I mean, even I was blown out of the water with the delivery numbers. And I'm someone who have been, talking about Tesla on this channel for over the last 4 years, have been pretty accurately close to not only the share price, but the delivery numbers. And the last delivery numbers, I mean, it took me by a huge surprise, which was a huge positive and a huge beat for Tesla. And that may be the precursor to a really good earnings. Now, with that said, I want to go ahead and hop into my laptop and kind of just take a look at Tesla stock from a technical perspective, as well as just cover a few other additional details. But before we do so, just a friendly reminder that if you have not done so already, consider hitting that subscribe button and hitting that bell icon so that you don't miss out on any future uploads. And also, while you're at it, make sure to check out the links in the description below, because one of the links is going to be a link to join the Push and Profit private group, where every single day the markets are open, I share a daily briefing of what names I'm looking at and what's going on in the overall economy. So make sure to check out those links in the description below. And with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and as I mentioned, we are definitely getting rejected by this weekly descending trend line. I mean, it's been since the last 3 years back in 2021 where we've constantly seen Tesla stock kind of get rejected and have some trouble over here. And it was very exciting to recently see this rally and see Tesla break above it. But ultimately, with the few catalysts that were negative, seeing Tesla stock fall down was a bit of a disappointment. But we're kind of hovering and teetering around that area now. I'll switch to a daily time frame so we could kind of take a closer look. And one thing that is also pretty notable is that there is now a lot more volume relative to price around these areas, which means that there's more of this exchange between the buyers and the sellers around this price point. And that means that we could possibly consolidate here for a bit longer until we ultimately break above, or obviously the other alternative is falling below. But this is actually a good sign. This means that, market participants, investors see that, there's this conflict of whether or not we should break above here or break below. If there's little volume relative to price, well, we would have a big swing up or down. But here there's a lot of indecisiveness, and that's actually okay. Especially as we're just hovering off a few percentage points from breaking above this descending trend line. And so definitely not a huge concern. Of course, we want to go ahead and monitor this and see, well, are we going to actually break above it and close a few days over it? Or are we just going to go ahead and have the market participants see weakness in Tesla and fall down? And as I shared, I think the big catalyst is going to be earnings season. Obviously, the earnings for Tesla, but I think earnings overall from a lot of other companies is going to go ahead and change the sentiment for the market, kind of like what we saw a while ago. Let's go ahead and take a look at SPY over here. Let's go ahead and pull this up on a daily time frame. And I want to go ahead and talk about back in April, right? Back in April, we had this huge sell-off, but ultimately we had a lot of earnings that actually performed very well. And it kind of pushed us upwards and out. And, that's when I shared my prediction for those within the Push and Profit private group that we were going to see, this 5,200 area. And when I say 5,200, I'm not talking about SPY. I'm actually talking about SPX. It's the same thing. It's basically the index ETF of the, it's the S&P 5. Oh, I'm sorry. Let me clarify that. I just messed it up. SPX is the, S&P 500 index. SPY is the index ETF, right? So same thing. But back in April, right, we had a lot of selling taking place. I said this was a buying opportunity for those within the Push and Profit private group, and we had a lot of earnings that kind of cycled us out of here. And I said, look, by June we're gonna hit 5,200. Well, look where we're at now. We're in the middle of July, and we're close to almost 6,000 on the SPX, right, the S&P 500 index, and so this little bit of a sell-off, while it does look, a bit concerning, it's not as bad as it was last time. And if we do indeed have another cycle of earnings from earnings season do well, that could again push us upwards. And so again, that's why all eyes are going to be on Tesla's earnings and a lot of the other companies. We'll go ahead and dissect those, and that's why today's earnings and Netflix was actually a bit of a excuse me, a positive. Now, I also want to highlight something else that's pretty interesting, right? So, one thing is that we're seeing this capitulation with a lot of the other automakers again continue in regards to what they're doing in the EV space. In fact, we have here from Bazinga mentioned that automakers or automobile manufacturers are pumping the brakes on investing in the future of electric vehicles, as car buyers think twice about buying them because of the high cost and the need to keep them charging. Now, I don't think this is necessarily the reason why these automakers are actually pumping the brakes. We often see, like, the media often say, well, it's because people don't want to buy EVs, and that's not necessarily the case. In fact, we've looked at the trends and the data before. People do want to purchase EV vehicles, but the problem is Ford and GM, well, it's, a cash burn for them. And so we have Ford announced today, we just clicked something that we weren't supposed to click. So we had Ford announced today that it's going to refit a plant in Canada to make large gas-fired pickup trucks instead of electric sport utility vehicles that was initially planned by that facility. And so they're kind of doing a big U-turn, pun intended, right, on EV vehicles. And then, of course, yesterday we had GM saying that it's planning to cut its production on EVs by 50,000, which honestly isn't too surprising. We see both these legacy automakers have these huge goals for trying to break into the EV space, and then ultimately, as the months come, they keep retracting on their goals. Or I should honestly say, not the months, but the years. As the years go by, they just keep downgrading their goals, and the reason being is because they're just losing money on this. And then, of course, if we have eventually the subsidies for EVs go away, well, it's going to put these guys, in a wheelchair, essentially, right? It's going to put them in a car crash, essentially, because, it's going to be much difficult to go ahead and be profitable once you take away the, subsidies, and these companies are just going to have to pull out even further, which is a benefit for Tesla. So that's something I just wanted to share. Now, we also had Sawyer Merritt, who is very active on X, and he shared this announcement from Morgan Stanley, Adam Jonas, who made this new research paper, stating that 60% of their survey respondents believe AI will be a bigger driver for Tesla's share price over the next 12 months than their core EV business fundamentals. Now, that is a bit concerning for me, and the reason why I say that is because for those that have been watching the channel for a while, one of the things I've been a bit skeptical on is the success of Tesla in their AI segments, right? FSD. And I know FSD is having great strides to the upside and they're having nice updates. However, my concern is the regulatory hurdles that may stifle Tesla from actually being able to have robo-taxis and these fully autonomous vehicles. And so that's a bit concerning. I'm more optimistic for Tesla for its energy business, its core fundamental business of selling cars, and also its robotic segments. Those are the segments I'm very optimistic for. However, Morgan Stanley and Adam Jonas, they're saying, hey, look, the AI narrative is going to be the huge driver for Tesla over the next 12 months. And of course, if we don't have any positive news, which I think we may have some positives, but ultimately I think it's going to be a lot more negatives with Tesla, with the AI segments over the next couple of years, well, that could be a bit concerning. And so that's just something I wanted to kind of highlight. And again, you guys can let me know your thoughts on, FSD and the AI segments for Tesla, and what's your thoughts over the next 12 months. But ultimately, again, we are at that critical area. And if we do have a positive earnings that is coming up for Tesla, we could finally break above this descending trend line. And once again, burn the shorts, the hedge funds that are shorting Tesla, because they still are shorting Tesla. And so very interesting area. Hopefully we have some more positives. You know, I am still invested in Tesla, my long-term portfolio, but I also trade Tesla in my short-term trading account. Recently I shorted Tesla. I was down a bit actually, and then the next day, yesterday, I actually was back in the positives with that short position, and then I actually closed it just because I wasn't very confident in it. You know, when you're in a position and you don't have high conviction anymore, just exit out. So I took a small profit, and right now I'm currently on the sidelines in my trading account with Tesla. But you guys let me know what you guys are doing with Tesla in your long-term portfolio or in your short-term trading account. Again, trading and investing are two separate vehicles. And with that said, before you guys go, make sure to subscribe and watch this video right over here. And I'll see you guys on that next video. Take care, guys.